In November of 2020, this post, depicting a map of Australia, with roughly a third of the land being covered in red patches, which were labelled as being owned by China, started to circulate. The post was reshared more than 7,000 times on multiple platforms, but it turns out, like a lot of news these days, it was fake. Australia-China trade relations have been tense during the pandemic period, that much is certain. Many politicians in Australia and around the world support the Morrison government's assertive stance against the authoritarian regime. But others believe that because China is such an important economic partner, a more diplomatic approach needs to be taken. So how serious is this? How dependent is Australia on China? And how much of Australia's essential assets are controlled by this regime? The Foreign Investment Review Board, or the FIRB, is the government department that approves applications for foreign investments into Australia. The department released a report in 2019 that shows that only 13.8% of agricultural land had foreign interests. There are two types of foreign interests, freehold and leasehold. Freehold basically means that you own the land, and leasehold means that you just have a lease on the land. In terms of freeholds, China is only the fourth largest owner. The United Kingdom, the United States, and the Netherlands own much more land than China, and Netherlands actually owns almost twice as much as China. In terms of leaseholds, China is the leader, but only by a very small margin, and 91% of the land that China has a stake in are just leases. In total, China has about 9 million hectares of Australian agricultural land interest. That might sound like a lot, but it's actually just a very small portion of the total 394 million hectares of agricultural land in Australia. So China only controls about 2.3% of Australian agricultural land. This is a pretty far cry from what we saw in the post at the beginning of this video. So let's see how much of other parts of the Australian economy is owned by China. In 2019, there were concerns surrounding the purchase by a Chinese textile company of an Australian cotton company called Cubby Station.
Covering 96,000 hectares in southwest Queensland, Cubby Station is double the size of the Gold Coast. The largest single irrigation property in the Southern Hemisphere, it has 460 gigalitres of water licences, which would more than fill Sydney Harbour.
In this case, the greatest cause for concern was the amount of water being licensed. And it's a lot, but according to the FIRB, foreign countries have entitlements to only 10.5% of total water entitlements in Australia. China and the US lead foreign entitlements, but roughly 90% of water is still owned domestically. China is entitled to just 874 gigalitres of the overall 39,000 gigalitres of water entitlements in Australia. So China controls just 2.2% of water in Australia. Housing prices in capital cities have almost doubled since the global financial crisis, which might be nice if you bought a home before then, but for first-time home buyers, the market is devastating. Numbers around the Chinese dominance in this area are hard to find, since most housing purchases don't need to be approved by the FIRB. But in 2017, ANZ, one of the big four banks in Australia, estimated that up to 400,000 dwellings were foreign-owned. This number would be much higher, but Australia has strict laws that mandate that investors can only purchase an existing home if that home is to be their primary residence. Purchases of existing homes that are not the primary residence of the purchaser are subject to approval by the FIRB. However, this limit does not exist when it comes to new home developments where there are generally no conditions. This policy was put into place to encourage foreign investment into new dwellings in order to create jobs in the construction industry. In 2017, a report by Credit Suisse, a major bank in the US, estimated that 1 in 4 new homes developed in New South Wales were purchased by foreign investors, and that 87% of those homes were purchased by Chinese investors. Okay, so the total number of homes in Australia is about 8.4 million, and ANZ estimates that about 400,000 of those homes are foreign owned. So if we choose to trust ANZ, then that means that about 4.8% of homes are foreign owned. We're not sure how much of the foreign-owned homes are Chinese, but we can guess that it's quite high since roughly 87% of new home developments in New South Wales are owned by Chinese investors. So with the rough data that we've got, it would be fair to approximate that Chinese foreigners own between just 2 and 4% of the real estate market in Australia. Let's look at the energy sector now. China owns Energy Australia, Yancoal, Alinta Energy, and Stockyard Hill Farm. Energy Australia has an ASX market cap of $6 billion, and Yarn Coal's market cap is $3 billion. Alinta and Stockyard are not publicly listed, but records show that Alinta was sold for $4 billion and Stockyard was sold for $100 million. On the ASX, Energy Australia is listed as a utility, while Yarn Coal is listed under Energy. Now, if you add up all of the energy and utility companies on the ASX, we can see that the publicly listed energy sector is worth about $153 billion. Since Alinta and Stockyard are unlisted, it wouldn't be fair to include them in this calculation. So if we remove them, then we can see that China controls about 6% of publicly listed energy and utility companies by market cap. There are some other interesting purchases we should mention, such as Ansell Condoms, Swiss Vitamins, the Meriden Airport, Lion Dairy, and Bellamy Dairy. Perhaps the most controversial purchases of all are the 99-year lease of Port Darwin and the 50-year lease of Port Melbourne. In 2015, the Chinese-owned Landbridge Group won the bid for the lease of Port Darwin for $500 million. Then in 2016, the bid for a lease on the Port of Melbourne was won by the Lonsdale Consortium for $7.3 billion. The consortium is led by QIC, an investment firm in Queensland, and it includes a 20% stake from a Chinese sovereign wealth fund. So they only own a part of the lease. To contextualize these investments, we should look at overall foreign investment statistics from the Department of Foreign Affairs and Trade, or DFAT for short. According to DFAT, in 2019, China was only the 9th biggest foreign investor. But we should include Hong Kong as well, since they're a part of China, and they're actually the 5th biggest foreign investor. So if we add China and Hong Kong together, they're still only the 5th largest foreign investor, contributing to only 5.7% of foreign investment. Japan contributes 6.3%, Belgium 9.1%, the UK 17.8%, and the US contributes 25.6%. So when you look at it this way, unless the investors are setting up warships on the Australian ports, it seems relatively needless to be overly concerned about Chinese foreign investment, especially when the US invests almost 5 times more. The one area that China does dominate quite spectacularly is Australian trade. China accounts for 40% of Australian exports and 27% of imports. They are Australia's primary export market for iron ore, coal, natural gas, gold, wine, and agricultural goods. And they're also the largest source of international students and tourism. This definitely helps to explain the growing sense of worry for the many industries that rely on this market. The most significant tariffs in place at the moment are on barley, beef, lamb, wine, lobster, timber, and coal. The Australian government has filed complaints with the WTO regarding these grievances, but it seems very clear that the Chinese government are more than willing to use economics in order to win politics. China has proven to be a very unreliable trading partner for which every nation in the world should seek to diversify from, and Australia is learning this the hard way. Hey guys, thanks for watching. This is a very new channel, so if you like the content, please like and subscribe to support us. Thanks guys.